Cool. Yeah, everyone, thank you for joining us this evening. So, as mentioned, we've got a number of things that are in play right now, especially into next week. I know some of you have joined the competition. Some of you, of course, want to just get some insights into the trading side of things and what to do next. Okay, so I've mentioned a lot. Trade what's in play, but we're going to go through the broad market first, and then we can start to uh, then move into what's in play. So just to make sure everyone is in, can we just have people just type a one in the chat? So you should see the chat option. Just type a one in the chat, just to make sure everyone is here and can hear me. Right. Awesome. Great. Okay. Glad you guys can hear me. Okay. So let's go through very quickly what is going on with the broader markets. So last week, the S&P 500 essentially surprised all the bears to the upside. Really, the market was hoping, okay, or usually when you see a move like this, where the thing makes a huge down move, a retracement up, and you can start to see the thing turn down. Very often, what many of the technical bears will look for is a move, all right, with a fib extension of the 100% of the high and the low. Okay, so we would join the high to the low to the high here, all right. As you can see, this is the start, and they would have looked for probably the 7336 level. And as you can see, on Monday when it gapped up, it essentially, invalidated the pattern, and the bears were, of course, caught off guard. More importantly, once it exceeded this high here, essentially the bulls took control, right? And then we eventually had a wedge that formed, right? This is the S&P 500 again, and you can see we have the breakout forming, all right? So the question then is, what is the measured move? Where can we go from here? Or is there a chance for a local top? So there's actually a way, or a standard way, which you can measure sort of a wave structure. All right, it's usually from the low of the wave to the high, and you should see the 38.2 coming up. So let me just put that in. All right, so the 50 and the 38.2 become relevant again. All right, so 38.2 is already tagged, so we can remove the fifth. We can remove that, and then we'll keep 50 just about tagged. And usually, this will coincide with a fib retracement of the fourth wave here, which is the consolidation wave. Okay. And if we add, say, the 227.6 level, as well as the 2.382 level, so we can just take this and turn that into 2.382 level. We can roughly get a zone. All right, it's a little bit messy here, but we can roughly get a zone or a level which things start to sort of collide together. Okay, we can see here that the likely level things may start to sort of be challenged this week is actually around the 76.40 or 50 level. So just take note that as the S&P 500 gets to this level, you may start to see a challenge or a consolidation start to occur again. All right, but still bullish into next week. Nothing in the options activity suggests that this is done just yet. All right. More importantly, let's move to key tech indices like the Nasdaq. All right. Nasdaq essentially did the same thing. All right. There were three potential paths in our market update. This is why, again, I've mentioned in my talks before, I try not to short markets because of this very reason. All right. Every time you try to short markets, you get this kind of surprise. It's not a good surprise. All right. So again, it was supposed to more or less make a consolidation to the downside, somewhere around the 28,600 level. And again, news on Monday invalidated the entire pattern. And you can see here, Similar to the S&P 500, intraday supports are now at 30266 and 30131. Okay, these levels again, here are levels which likely the NASDAQ will bounce off, especially on the future side. And again, if we want to do some measured moves, all right, this is the fourth wave here. We can sort of like figure out roughly where this move may start to run into some resistance or topside consolidation, all right? So this is the top of the fourth wave. And then we are looking again for a 50% and the 61.8. So somewhere around this region here, 30576 to 30768. Roughly around there, you should start to see the NASDAQ start to find some resistance. Now, on a macro basis, we've got non-farm payrolls this week. So that's going to affect your US dollar trades. So do watch that carefully. Again, I would say currency pairs are not really in play right now, but I will go through I'll go through the two carry trade pairs, which a lot of people do often talk about because those are easier ways to make money versus trying to do scalping on a directional basis right now in FX. Okay, 80-point ranges in FX is not ideal, but this is for the NASDAQ. All right, now if we look at the macro front, if we look at the 10-year chart or the 10-year yields, okay, so we can see the 10-year yields have come off significantly, all right, from the Iran war highs. All right, this has done quite well. And this is essentially, the bottom side support is 4%, top side is 4.8%. Again, 4.5 and above, market starts to panic a little bit, all right, because treasury auctions start to have issues and the bid cover ratios tend to fall. All right, so, but having said that, do bear in mind that we are coming off still historically low interest rates. It's just that in terms of overall leverage in the system, we have a lot more leverage in the system. So we are a lot more vulnerable to interest rate shocks. All right, now, one index to watch to see if yields are truly having an effect is the IWM. All right, the IWM consists of, roughly just under 2,000 companies, many of them small and medium-sized enterprises. Most of them are not your NVIDIAs, all right? They rely heavily on leverage. Some of them are zombie companies, as we call them, all right? So whenever the 10-year is actually spiking, you will start to see the IWM start to come off. All right, so if you want to know if interest rates are going to affect the stock market, the IWM is a very good gauge to see how much damage interest rates are doing to the stock market. All right, but as you can see here right now, no worries for the IWM. New highs, again, we can start to see also potential upside targets and consolidations somewhere around the 60, somewhere around this 296 to 300 region before things start to consolidate. All right, so in terms of overall market health, because of the invalidation last week of the bearish cases, we had very nice bullish action, and that bullish action is looking to continue. So again, I just want to reemphasize that when it comes to the stock market, try not to predict a top. Let the top form, let the 9 EMA, on the hourly and the 4 hourly get broken down. So the candlestick should break below that. The 9s should start crossing below the 21 if you want to start hedging. All right. Now, if you are a swing trader, many of you say, but I don't want to lose the profits I have. Statistically, you are far better off holding a long position and then cutting out when the position breaks the 21 EMA and when the 9 crosses below the 21 EMA, cutting everything out there with the 50D SMA as the final line in the sand. All right, so you can cut a third when the 9 EMA breaks, cut a third when the 9 breaks below the 21 and the position starts to go below the 21, and cutting the last 1/3 at the 50 SMA. Usually, the overall returns are still better than you trying to predict the top, selling, or shorting. All right, shorting, as you can tell, has been very hazardous to anyone's account health at this point in time. So Be very, very careful when shorting equities. They do not mean revert, like say FX, gold, or even oil or commodities. All right, and that's because there is no incentive for any government in the world to actually let stock markets mean revert. For the governments in the world, stock market going higher is a good thing. All right, but bonds, commodities, FX, they want them in a large range. Anything outside of those ranges is disorderly for the economies and for the governments. That's why they want them in a range. That's why you see a lot more mean reversion in FX, gold, and bond yields if you trade those instruments. All right. Now, moving swiftly along, we will now move to gold. All right. This is in play. So this is in play because we have the Strait of Hormuz likely reopening. Huge war premium built up in gold. All right. And huge run last year. Now, bear in mind that my entire view of this, all right, and again, these are entirely my views. It's not financial advice, is that we are having a correction within a larger bull trend. China is still a huge buyer. The PBOC is still a huge buyer of gold. Be very, 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 very wary of being overly bearish. But in the short term to medium term, I do expect to see some downward pressure. There's some technical nuances. All right. So in the very, very short term, I just want to show you where gold has come from. This, all right, move lower is a standard corrective ABC pattern. This is a B, and likely we are either having a C or maybe one more up move here before a move lower. All right. So if I were to draw out the pattern, all right, so there is a potential for this to revisit one more level here before it comes down like this. All right. Although the most likely pattern that this will do is it should just head straight down. The question is to where? All right. Again, these are bigger time frames, intraday time frames. Please do note that you should watch the intraday nuances on gold, especially with the stochastic side. So we can make some measured moves on gold in terms of where things go. All right. So if we're talking about the upside move, just use fib extensions. Again, we have these videos on YouTube, and usually for corrections, all right, we will see a move to somewhere around the 88.6 to 100% region. So gold would likely, if it does move, all right, let's see if I can, yes, path. All right, cool. It will do this somewhere around here within this box, and then it will come off. All right, if it does this upside move. All right. So this is one path. If it chooses to go straight down, all right, the level which it could hit to the downside again would be measured from this larger time frame move here. Okay, so depending on where the top is, if the top was here, if this was the B wave, we can actually measure the move that it is likely to make to the downside. All right, so this is the A wave to the high of the B wave. Okay. And we would roughly see possibly as low as 3,400 on the downside if things actually start to, really, really take the downside on gold. Bear in mind, again, we do have a war premium that will likely come out of gold when a deal is done with the Strait of Hormuz. So be very, very light around gold. Trade 15-minute time frames with a bearing in mind that you could see some serious downside moves in gold in the coming days. All right, cool. I will get to your questions shortly, and I will get to Micron and PLTR shortly as well. Okay. Now, the other thing that's in play, WTI. All right, I'm just going to go down here. This is WTI futures. Okay, this is very much a likely triple top. All right, this has a huge downside potential if the Strait of Hormuz gets resolved. All right, this is, as you can see, a head and shoulders. It's a little bit messy, but if it does play out, all right, we can actually do some measured moves. All right, from the head to the neckline, and then you just extend it here. All right, so we can see downside in oil that could potentially hit the 45s. So just be very, very wary if you're trading on the long side of the crude futures. Again, just remember that Trump is very disincentivized to continue strikes or restart strikes. All right. So just be really, really cautious if you are trying to be bullish crude oil or Brent futures, given the situation in the Strait of Hormuz. All right. Do expect to see resolution there. Cool. Now, we will move on to just quickly, anyone want to cover Bitcoin, BTC? If you want BTC cover, just put a 2 in the comments or the chat, and then I can know. If not, I'll just move straight on to equities from here. All right, so you want to come to Bitcoin. Cool. We'll cover Bitcoin. So again, technicals work really well on Bitcoin and ETH, but for when it comes to anything below ETH, i.e. Solana and below, be very, very careful because they trade closer to small cap equities or micro cap equities. So they have their own sort of like dynamic, similar to what I've shown you guys before, told you guys before within the chat in the Telegram site, where I showed you guys what some dynamic small cap equity squeezes look like. That's kind of how crypto trades anything below the Solana line. All right. Sudden huge squeezes and then tremendous collapses of 80-90% after the squeezes are done. All right. Just bear in mind that the crypto world and the guys who truly make money there are guys who are very, very quant native. They generally run market neutral strategies and have very high Sharpe ratios in them. So do bear that in mind when you are trading crypto. All right, but let's anyway look at Bitcoin in the larger scheme of things. All right, so Bitcoin. Okay, just to see where this came from. All right, just to remind you guys, this came from a over the 125K level. All right, there is a potential that this has some hope because a larger downtrend line has broken. All right. However, the target, if let's say this does not hold, and I'm going to give you some targets on that. All right, is so we're going to have to draw an additional line. So the line in the sand for Bitcoin, which it cannot drop below, if it loses this level, this thing will fall through the floor. All right. Now, in order for it to maintain its bullish case, it has to stay above the 62,700 level. It cannot fall below this. If it falls below this, all right, the trend is clearly downwards. And just to give you guys an idea of how big a downside is, okay, Bitcoin does follow measured fib moves to the downside. You are looking at levels all the way below towards the 20+ thousand level, possibly as low as the 16K plus level. But if I were to add just another level, Bitcoin likes to start usually around the 61.8 to 74 level, 76.4 level. In terms of when it sort of comes down versus say stuff like FX, it tends to do that. Just draw this for you. So a target, if it were to lose this key 62,700 level, I would say this is the box. All right, that this could fall to 41,686 to 32,050. Now, having said that, better be an optimist most of the time. We have seen a break out a longer term downtrend and a nice consolidation move. All right, so question is, are there precise entry points that we can actually start to deduce from here for next week? Overall, yes, we have. Quite easy. Draw a retracement, all right, to the low down here. Okay. And you can see here it's tagging the fib lines very, very nicely. So if you have a 50% retracement, I'm thinking 71,510 could be a level where this starts to gain momentum again. All right, and let's say it does come here, then the question is how high could it rally? If it rallies off the 71,510 level, so if you are swing trading on Bitcoin, I would use the 15-minute chart for entry. I would want to see some sort of risk candle like this. All right. So you can see a nice hammer wick here, right? Bullish wick here. You will want to see at least 2 candles, all right, above that without this low being broken before you consider a long position. All right. At least 2 candles after a bullish week. So you don't count this initial low here. So this could be the start of a rally. So you've got 1, 2. All right. If let's say on the 15-minute you have 2 of these. All right. And what you're looking for is a strong push off immediately. So you want to see something like 1, 2, and then start seeing a strong push off. This is not a strong push off. All right. A strong push off is like this, something like this, 1, 2, and then it really starts going. All right. Unfortunately, right now, crypto is still lacking a catalyst. Maybe the Strait of Hormuz resolution could, change a lot of things. But having said that, in the short term, just be wary that this is not pushing off as fast as we want it to. And let's say this were to come down a little bit further. How do you know when you're wrong? We can actually draw a simple trend line to figure out where we are wrong. All right. So if you're using algos for this, this would do the push-off point. Your trend following algo might not be able to actually detect, but it should be able to detect on the mean reversion algo on the snapback if this were to fail. So if this loses this trend line here, okay, so let me just open up the chart a bit more. So this is this trend line here. So if we see 73,770 actually break down, all right, to the downside, we could actually start to lose, okay, and bounce off towards this level, 71.5, before this eventually starts to bounce off to the upside. So right now, the better stance is to actually stay bullish in terms of Bitcoin. All right, so a bullish bias. However, do bear in mind, you do have a fairly treacherous level. All right, if Bitcoin loses the key 62,700 level, and this can happen in a day. All right, so just bear that in mind when you are actually trading Bitcoin. Okay, cool. Now we will move to currency pairs quickly. Again, this currency pair has not really made the news, but it is a good carry trade pair. The swap is positive in your favor. So when it comes to dollar Swiss, just bear in mind, the Swiss franc cannot be too strong. All right. Now, the Euro Swiss is the stronger and more liquid pair. All right. But I just want to show you guys where this has come from. All right. Just from a very, very, very big picture standpoint. All right. This is where it's come from. Okay. This used to be well above 1, and look at where we are. Okay. Now, the Swiss franc and the euro are very, very correlated. They are in the same region. The Swiss franc tends to gain, especially when there are wars, but they cannot be too strong because the Europeans will start to suffer and they are not able to actually repay a lot of their debt. So how much of Europe is funded is they borrow in Swiss francs, buy European assets, and then hope to pay it back. So if you were to buy, a lot of people actually buy, say, buildings. Say if you buy an office building in Europe, in Germany, many of them, or France, all right, they would actually take the loan first in euro, and then they would convert that euro into a Swiss franc loan because the Swiss franc rate is cheaper than the euro rate. So having the Swiss franc where it is not favorable to the entire European economy. All right. And having said that, as we can see, as long as this low here at 76 is not reached, all right, there is a lot of pressure for this to be pushed up to the upside. Bear in mind that Switzerland is an export economy, and having such a strong Swiss franc is not necessarily good for it. All right. Bear in mind also that the SMB has intervened before in the market. So the Swiss National Bank, all right, had a peg in 2015 and 16. They let that peg go. And of course, we are where we are. However, they have intervened in the market since then when the Swiss franc has gotten too strong. All right. Now, so overall, dollar Swiss, I'm still looking for a push towards the 80 level. In terms of overall biases, there is no technical reason in terms of why you should have a short bias on this other than intraday scalps. And you can just, I would say, I would be looking for long positions in dollar Swiss most of the time. This is, to me, the #1 carry trade currency pair right now that is available to you in the market. All right. I know a lot of people look at the dollar yen, but just bear in mind that as JGB yields tick higher, the dollar yen can come off significantly. And also, do bear in mind that there is BOJ intervention in the dollar yen. All right. So right now, at this point in time, if the system keeps strengthening, we may see SMB intervention. There is upside risk towards the dollar Swiss, just because of the global macro standpoint and economics of it. Now, the dollar yen is the common currency pair that people use for carry trade. Last week, I did say, okay, again, that we were looking for a move higher towards the 160 half level. Did move a bit higher, but of course, as you can see, more or less maintain an 80-point range. I am still looking for that move towards the 160 half level before a consolidation. So I still have a long bias. Anything above this, though, I just want you guys to bear in mind that BOJ intervention increases significantly. All right, this was the intervention. So one thing I would say is that don't assume that the last Bank of Japan intervention level is where they will intervene again. It is not. All right. Very often after they intervene once, they tend to move that level significantly higher. Where? It is anyone's guess. All right. So I would, if you were long into the 160 half level, all right, on a carry trade, I would say start taking positions or hedging your positions as you as it actually moves past the 160 half level. All right. But as for now, there is a strong bias to the upside, especially if the Strait of Hormuz is resolved and risk on continues. You should start to see this move higher. Okay. With that, we will move to equities. Okay, guys, I will cover Micron and I will cover Palantir. The whole software sector is in play right now. All right, so the software sector, we have our IGV ETF. We can see how that has really taken off since the lows. All right, so in the 73, 74 lows, all right, we can see how this has really taken off. But I just want to zoom out a little bit and let you guys see the bigger picture. All right, and just bear in mind where we are as well. Okay, so we made a nice double bottom here. All right, but just bear in mind, okay, that as we go, okay, I'm going to zoom in a bit on this. All right, we have tagged the 61.8 retracement level on IGV, and usually, all right, when it passes the 61.8% level, there is a likely continuation to the upside. So if you're talking about what sector is in play in the market right now, the software sector, as we can see on Friday's price action, is a sector that is very much on the radar screens of many traders as well as portfolio managers. Why? Because it's been sold off all year. All right. Now, with regards to where it could go to the upside, we are looking at 110 as a potential upside target to complete the entire double bottom move. All right, before this starts to either go sideways or you need some sort of episodic breakout for this to really see new highs. Okay, but again, bear in mind that many software companies are AI native. They do better with AI, not worse. Okay, their numbers are actually improving. Many of them, ServiceNow, all right, stuff we mentioned last week, update. Okay, as you can see, we had this wedge, all right, mentioned to you guys, long-term downtrend. ServiceNow has been reporting great numbers, all right, they are AI native. Oddly enough, Anthropic all right, actually uses ServiceNow as their ERP software. They use ServiceNow and Salesforce. All right, so whatever vibe coding thing people say, reality is even Anthropic uses ServiceNow and Salesforce. All right, even to this day. And as you can see, the price action can be extremely explosive once this starts to move. So ServiceNow reporting great earnings. Every time some guidance that sort of mismatched, you can see the stock sold down. All right, this is the earnings piece. But now you can see base form. And then once the base is formed, and you can see the shorts were cornered, consolidated throughout the week, exploded. All right, these exploded on Thursday and Friday. How do I know? Told you guys about it, and I was in it myself. All right, so this is what's a great trade. So the entire software sector is in play right now. So what has not quite caught up yet? Which is part of the question. Palantir Technologies has not caught up as much. All right, there is a lot of room to the upside for Palantir if the 116.97 level breaks. All right, the when you have a move this sharp and this vertical, all right, on volume, as you can see here with the volume candles, all right, if you look here, the volume candles are on this move was high, all right, especially on the folly for a swing basis. This is looking for the 161 as the first resistance. However, I am expecting that once it hits the 161 level, you may see it bounce around there a bit. But the moment that breaks out, you can start to see how much upside there is to the upside here, all right, in terms of the overall chart. You are looking at a revisit of the highs in the 200s thereafter, and then it's blue skies there above. And yes, when it comes to equities, I do take I like to use 2.5 standard deviations for the Bollinger Bands when doing my analysis. But just bear in mind that when I use 2.5 standard deviations of the Bollinger Bands, for equities, I'm only looking at it from the long side, not on the short side. The short side, again, I only look for short opportunities if the 9 and the 21 break. All right. Be very, very careful when shorting equities. Again, I've seen so many people go broke trying to do it. All right. But Palantir is one of the laggard plays in software. It's an AI native play. And frankly speaking, this has way more to go given how ServiceNow has moved. All right, let's see the other software names which Anthropic themselves use. Okay, CRM. All right, Salesforce. All right, so Salesforce, as you can see, broken out as well, just like ServiceNow. But look at this. It's broken out the base. This is a very nice basing pattern, 3-month base. And you can see right now, the next targets to the upside, you have 203 to the upside. And then if it can really get going, we are looking at levels in the 240s, 250s to the upside. All right. So when it comes to ServiceNow, Salesforce, Palantir, these are good names to keep on your list when it comes to your week ahead, or at least in the next month or so. These are names that are going to be constantly in play. And in terms of risk reward, you may see actually some of the AI trade rotate into this, okay? Especially within, say, stuff that's run a bit far, like the compute or the optics space, AAOI and all this. You may see them actually start to move towards the software sector, all right? Now, if we look at Microsoft, everyone's favorite big cap, okay? Similar story, inverse head and shoulders pattern, all right? Or you could say this is a cup and handle, all right? So we had a nice wedge here, but if I drew this here like this, all right, you can see this is a very nice cup and handle breakout, all right? So this is the cup, base, handle base. Usually when this happens, the target for Microsoft, from what I know, a lot of stock traders are targeting the 500 level for Microsoft. All right, so just be really, really wary if you are trying to short this name, because this is another AI native name. They benefit from AI. They do not get disrupted by AI, and their numbers are great. Okay, so Micron, our favorite stock. Okay, Micron, this is everyone's darling right now. When you see this, I would not look for shorts at any time. But this is an overextended chart. Still, huge breakout. And what you want to look for is a pattern that kind of looks like this. Something that goes sideways a bit before you want to play your next breakout. All right. So whenever you're looking at a stock chart that's very extended, wait for a sideways type pattern before you start to look for long positions again. But as for now, all right, within the short term, if you are looking for intraday trades over maybe 2 days versus a couple of weeks, right? Micron does have a nice consolidation forming here, all right, which if it breaks out into the new week, all right, you could see upside start to move. So this is a nice base pattern. Again, when this starts to break out on any news, could be anything, could be Iran or anything, you want to see it break out ideally like this, a gap like this. So you can see here, when stocks break out, the most powerful breakout pattern is always something like this, a breakout with a gap. All right. So you want to see a gap like this when it breaks out, and then ideally it should not retrace too much, and it should not actually test this 977 level. The 1000 level is the obvious target, and the 1500 level is where a lot of people are looking at for Micron right now, especially the prop firms on the desk, hedge fund PMs. A lot of them are looking for 1500 on Micron. All right. But yes, we need to see this gap and go in the new week and go fast. All right. So with that, I have completed at least the analysis which I have prepared in advance. So turning over to you guys, what do you guys want to cover in terms of analysis? Just put it in chats. All right, ETH. Let's look at ETH. Cool. ETH. Oh, dear ETH. So all right, this looks horrible, but anyway, yeah, this is bad. Okay, so where is ETH and what is ETH doing? So in terms of overall pattern, all right, just to revisit where we were last year at the highs, came back down. We had a nice B wave. This is actually the C wave, and this is most likely the fourth wave before a fifth wave comes down. Question is, where does the fifth wave go? All right. So if ETH is to stand a chance, oh no, it doesn't stand a chance. It's broken already. So this is actually a breakdown of the bounce. All right. And the most likely target when it comes to breakdown of this bounce is the 38.2 level on the downside. So I hope that doesn't actually materialize because it's quite painful. But if it does, yeah, well, it is what it is. So 50%, it could visit the 38.2. Let's find where's my 38.2. All right, cool. Here it is. So it could visit this level here, the 38.2 here, 1844. All right, or 1650. All right, but it could get as low as 1457 before we see a resolution to the downside. So let's hope it doesn't happen. All right, but as you can see, the ETH BTC cross is definitely worth looking at. All right, because this has not been bullish at all. All right. All right. So Netflix, let's look at Netflix. Cool. Netflix has been a very interesting name to trade as of late. Okay. So just gonna delete some of my annotations here. Okay, cool. So where is Netflix? Into next week. Okay, we need to see in terms of this overall uh, move in Netflix as of late. All right, Netflix seems to be basing out. Okay. By the way, all the stocks that you guys are mentioning can be traded on the challenges for Veridium. We do have these names on the equity challenges as well. But let me just give you sort of the movement patterns that we are likely to see. All right, cool. So Netflix, very simple. Netflix, there is a view by most that this will probably at most double bottom here around the 85.25 level. All right. And where are we looking at if we want to see a base? So remember, you guys, we just saw bases in software, right? So what we want to see is this essentially snagging. See where's my path? Yeah, there's path. This snag here before it goes, so this goes here, and then it goes straight up, breaks here, and then continues to the upside with some sort of like episodic pivot. All right, so that's kind of what we want to see for Netflix. But the 85.25 level is something that you want to see hold for Netflix, and then a move up to test the 90 level. But on an intraday basis, all right, what are we looking for? Yeah, there's not much intraday happening. Literally, you're looking for this 85.25. It's 75 cents away. This is a nice high probability setup. All right, it should tag the bottom of the 2.5 standard deviation Bollinger Band when it tests this level. So 85.25, a key level to watch. All right, Costco. Let's look at Costco. Okay, cost. Ooh. So cost is very bearish. I hope you are not trying to pick a bottom of this one. The stock is actually more or less in a stage 1 decline or stage 4 decline, as some say. So be very, very, very careful about Costco, all right? Because there is no indication where this downtrend will end. It would need to break a downtrend down here, all right, to the downside. It would need to break this huge long-term downtrend line, all right? If not, there is no reason to be long Costco. There are better names out there. The AI names, the software names, much better to look at. All right. So yeah, wouldn't spend too much time on Costco, especially if you're trying to bottom pick it. Your mean reversion algorithms might tag some of the trades in the short term with regards to Costco, and you could play that. Costco is a pretty good mean reversion name if your algos can pick it up correctly. All right, so we're going to go to BABA. All right. Again, similar to Costco, no reason to look at it. Look at that. It has no bid whatsoever, right? I think if you guys, sorry, let's move this up and leave this open. Sorry, forgot to maximize the charts. Yes, this, all right, could see 121 on the downside for Alibaba. Again, no reason to stay long the stock until you see some sort of basic pattern. This needs to break out. Then you can start considering long positions. Very, very bearish price action on the overall. You can see, you could see that you could visualize the trend line already if I just drew it. Right, no reason to actually be long the stock. All right. On the short side, of course, you could try for a test for the 120.83 level. But where you would be wrong is obviously a break of this 125.50 level. Just keep your stops really tight if you're playing on the short side, all right? And watch KWeb as your sector ETF if you are shorting the stock, going long, all right? Next one would be UNH. Cool. This has been a great stock for selling options if you caught the options. I hope you guys caught some options on this one. But this is very choppy price action. Mean reversion algos are going to do great in this stock, but it is going to be horrible if you have trend following algorithms for this stock, right? You're going to get chopped up so badly. you're gonna get stopped out nonstop. But right now, in terms of bigger picture, I just want to take you guys back just to show you guys where this has been. All right. So this has come from a beautiful basing pattern here. All right. And then I think it was the Buffett stake that pushed this back above this breakout line. All right. Again, you see, when you get huge gap ups and goes, they really just go. They should be doing this. So let me just zoom it in a bit for you. When a stock breaks out nicely, all right, so ignoring the green line, which is VWAP, it should serve the blue 9 EMA line very nicely. This is institutional buying, right? When it serves a 9 EMA line very nicely, then you have huge gaps like this. You can see barely breaks the 9 EMA. Into here, tested 21, boom, it goes again, all right? This is what you want to see when you are buying a breakout. Or if you have a trend following algorithm, the 9 EMA should be one of your guides when it comes to your trend following. All right. By the way, that's actually a pretty high sharp strategy if the 9 EMA is used as a surfing line when it comes to your trend following algorithms. All right. Pretty high sharp ratio there. Now, where are we? We've got a very nice consolidation here. All right. Unfortunately, we need to actually get a breakout of some sort. So let's just see earnings. Is there earnings? No, that's in 40 days. So this is going to resolve soon. I would say right now, in terms of the stock, I would be very cautious on either selling options or anticipating a breakout. Be very, very, very careful of that. All right. If you do either, you can get caught wrong-sided and be caught wrong-sided very, very, very badly. If this breaks out, you want to see again something like this: breaks out, gaps up, serves the 9 EMA, keeps going. But we can make some measured moves. All right. So how big can we go, or how far can we go? If we have a breakout to the upside, we could see levels in the 450s to the 460s. All right. This is if you're trading a bigger, longer term trend. All right. And on the downside, of course, this could resolve anywhere in the 350s, depending on what news transpires. All right. So there's no actual clear trade right now in UNH, but we are in a consolidation pattern, and you need to see whether it resolves in the breakout. And if the breakout happens, you should get huge volumes. You should get, just a very nice surfing of the 9 EMA. All right. So do put this on watch, especially if you have trend following algorithms once the breakout has occurred. For trend following algorithms, just a simple note: when it breaks out, all right, the trend following algorithms should start to pick up when it makes the first consolidation move here. So something like this at this point here, all right, if your algorithm is sort of set up correctly, in a move like this here, it should start to pick out that this is a continuation already. So there should be some sort of regime, saying that the trend is most likely going to be bullish, and then just start taking positions already. All right. If not, do revisit your model. Okay. Having said that, let's look STX. Cool. STX is another memory name. All right. Similar to Micron. Just a reminder that these names were completely dead for 20 years. Yeah, look at where they came from. Like 20 years. All right. They did nothing for 20 years. And then all of a sudden, AI came along. And with all the AI slop, all of a sudden, we have a ton, all right, of demand for memory. All right. And just like all the memory names, whether it's SNDK, Seagate, or Micron, you are seeing a very nice uptrend surfing the 21 EMA on the daily. All right. Again, 9 and 21 on daily, very, very, very good guide as to whether institutional support and accumulation is there. Okay. Now, short term into next week, I would say right now there is this nice setup, although I'd like it to get a little bit tighter. Okay. So there is this nice consolidation setup here that is happening within Micron. However, I would say it's not the perfect pattern because I would like it to get a little bit tighter. What do I mean by it getting a little bit tighter? So in terms of tightness, right, you want to see stuff. This would be a nice tight type of range. So something like this, tight. And if I actually zoomed out, you should also see volumes like start to fall, all right, when you have this range. What does it mean? When you get a tight range, volumes falling, it means demand is in equilibrium, and there is huge institutional support for the stock, the overall. Okay, so again, here, consolidation right now, wouldn't anticipate this, wait for the breakout or wait for the breakdown. If there is a breakdown, again, look for it to resolve somewhere around the 790 level or possibly the 820 level. So somewhere in the zone here, you should see a resolution of the breakdown if this breaks to the downside. And if this breaks to the upside, we would probably see levels within the 960s to the 980s, all right? The question, of course, is if you wanted to trade STX, it's pretty expensive. So there are leverage ETFs you can use. These are not available on our platform, but you could use them. So just type STX2X. The list of available stuff would come out. All right. So stuff like STXL, and just look, make sure the volumes are there so you can see trades for a fraction. All right. So like an example would be ServiceNow. Now L was the 2X ETF used. All right. This was the ETF I used. I got it at 490. 489, 490, surfed it all the way up to, I actually got out at 730. So I didn't get this last 50-cent move. But sometimes if a stock is in the 3 digits, search for the 2X ETF to see if it makes sense. Some of them don't quite make sense, like the Micron side, like MUU is almost as expensive as the stock, all right, because they've moved a lot and Micron has just gone, all right. Now, SOXL, let's look at that. So this is a great ETF if you are a trend following guy, but man, you can get stopped out a lot. It can whipsaw you a lot. However, having said that, there is no exhaustion indication yet. I actually do think that this continues, all right, because of the relative strength that this has had. Every time it has sold off, it has managed to regain composure and start to trend higher again. So your trend following algorithms, if set up correctly, should be detecting this especially. However, this consolidation is a little bit wide. I am looking for at least one more move to the upside here, all right, before we start to see a consolidation to the downside, all right? The question is, how big is that measured move? Again, we're going to use our simple 38.2, fit projection from the low here, or the 50 or the 61.8. Let's just see. All right, so this one, yeah, so somewhere around the 280 mark, 278, 280 mark, or 279. All right, I would watch SOXL, okay, for a consolidation move to the, I wouldn't necessarily say sell down, but maybe a sideways move or some sort of like sector rotation out of SOXL. Cool. Hype. So Hyperliquid has been a great stock, all right, has been a great pair to look at, especially with how Hyperliquid has dominated DeFi space with regards to on-chain exchanges and the impact it's having. So this has been something that's been on my watch list. It's one of the tokens I'm more bullish on, especially after the Solana site got hacked. I thought that Hyperliquid was one of the tokens that could really prove to be a relative strength play within the crypto space. All right, but you can see here, overall, very nice trending upwards. There is a natural demand for Hyperliquid. All right. In case all of you don't know, Hyperliquid, you can stake Hyperliquid tokens, create RWA markets on Hyperliquid. All right, and you need to stake, I think, something around like 10 million worth of 8 or 10 million worth of tokens. Or was it 2 million worth of Hype tokens to actually create those markets? You can create 3 markets. You need 750K in liquidity. You can actually do it. All right, but this very nice bullish trend. Again, your trend following algorithms should be picking this one up, all right? Especially after this really long consolidation down here, all right? This should easily move a couple of dollars to the upside. If I were to take this as a simple base, It's the poll. All right. So if you ask me between hype and soul, I think soul's kind of passe now. Hype is a new thing, and they are truly dominating the on-chain space. Even the CXs, as well as the stuff like Coinbase and all, they're really feeling the effect of Hyperliquid's dominance. All right, and I think yes, we see the 76, 78 level for this token. All right, drone stocks sector in play. Fly, there's a request for Fly, so Fly is within the drone space. So a couple of names in this space: Fly, UMAC. These are not available on Veridium's platform because they're extremely speculative. So when you trade these, please do be very careful. All right. But nonetheless, I will help you cover this for now. Okay, so we are seeing a basing pattern that's happening for Fly down here. Okay, there is some sort of semblance of a base here. But having said that, all right, there is no indication of a breakout yet. Some of the other names, UMAC, all right, have better momentum. I think we had ONDS, Ondas. These are some of the drone names that played out really well last week. So kind of watch these instead, because Fly has a huge technical overhang from this huge downtrend. So there are better names out there. This could be like, some of the software names sort of go sideways here, and then, just like ServiceNow, you go vertical into, I don't know, Wednesday, Thursday, Friday next week. Possible. But I would be, I think there are better names within the sector to actually play this. All right. So, yeah, just keep this on watch, but better names out there that have already moved and already have relative strength in them. Okay, cool. Okay, so I covered PLTR. I'll just bring it up again since one of you asked. Okay, again, I'm looking for a test of this 161 level. All right, for PLTR into next week, especially early next week, I am looking for a breakout and then for a move back towards the 180s and 200s again. All right. AVGO, we can go there.
Just a kind reminder that we are at the 4-minute limit before the webinar ends. So we cannot cover all the tickers in this session. Just make sure that to join us back in our future sessions as well. Thank you so much.
Yep. All right. So yes, for AVGO, nice base and breakout. So this definitely long biases. And again, if you're looking at something tight, this is what I mean by tight. And you want to look for a breakout into next week. All right. Cool. All right. I think I've covered quite a number of things. AVGO, Palantir. These are all available. STX, UNH, all available on Veridium's equity challenge platform. So do look at them on the challenge platforms. With that, thank you guys for joining. I will try to do this maybe midweek, but definitely every Sunday, as long as nothing comes up, I will try to do these sessions with you guys. All right. So have a great weekend. Enjoy your long weekend for those of you having a long weekend. And we'll see you for the competition. If you haven't signed up for the competition, just a reminder to sign up for the competition again. All right. And in case any of you need the link, let's see if I can brute force the link here. Okay. Can you guys see it? Cool. Okay, so please do sign up for the competition. Okay, guys, sign up for the competition. Prove that you can trade, all right? Like I said, I use fairly simple stuff, the USIC journey. I just wanted to share something quite cute. My US investing championship journey, I was actually up 30.88%. And then on Friday, I lost a couple of dollars, and I'm now 29.96%. So I'm like 4 basis points below 30%, but a bit annoying, but yes. But guys, sign up for competitions, test your strategies and competitions. Please do make sure you sign up. C-Trader will be the main platform that we use. So again, sign up for the competition, and we'll see you guys next week sign up for the challenges. Anything, just put it in the chat. And all the best. Hope you guys make a ton of money in your trading journey. All right.